Hey guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about the top 3 stocks that I am buying right now. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And if you guys are new to the channel and you're like, who is this guy? My name is Carter. I'm actually a full-time trader in the stock market. And with that being said, we do have an amazing school where we talk about my strategies, my mindset, how I find stocks and opportunity each and every day. I'll put it down below. You guys can use code YouTube to get 20% off. So I'll see you in there. But guys, let's dive into the top 3 plays pretty much that I'm buying as soon as I can here. All right, so let's move on to stock number 1. Stock number 1 is Home Depot. Now, obviously, one of the reasons I love this one here is as we zoom out, this historically has beaten the S&P 500, the Dow Jones, the NASDAQ, all that stuff. It hit all-time highs at about $400, sold off down to levels near and around 270, establishing support. And the thing is it's gone from 270 all the way up to about 370 in a matter of a couple of months. And I definitely think that right now, Home Depot is one of these plays where it's a growth stock, but on top of that, this is a dividend stock. The company is a dividend growth stock. It historically has grown their dividend each and every year. So I really think looking back in 2 to 5 years, we're going to be wishing we would have bought Home Depot at these current prices. On top of that, Home Depot, is kind of almost a recession-proof stock. And the reason why is people are always going to need home improvement stuff. People are going to need plumbing, HVAC, lumber. It's just one of those things that we will always need. So I definitely think that Home Depot is an absolute very, very good play. Now looking at the finances here, as we scroll down here, you guys can see that we've struggled a little bit on their total revenue. But the thing is, like I said, companies have bad revenues. They have bad quarters. What I really care about is long-term growth. Long-term growth, is the company growing? Are they doing well? And that's kind of what we've slowly seen here, is they've had great revenue over the past, several years, 1, 2, 3, 4 years, a little slump so far in 2024, but honestly, this could be an absolute fantastic thing for Home Depot in my personal opinion. The reason why I say that is because their cash flow, even though they haven't done the greatest, their cash flow is still beating expectations. It's still up 3%, which is really, really good to see here. So I really think that right now Home Depot is a great play. The dividend yield is 2.25%, meaning for every $10,000 you have invested, that's about $225 in free cash flow. So it's a great play, and I'm very, very excited to see where this stock goes in the future here. All right, let's move on to stock number 2. Stock number 2 is a company we've talked about in the past on the channel, and that is Opera. Opera Software here. This company, for those of you that don't know, Opera is a stock that is a search engine artificial intelligence company. So they do compete with Google. They do compete with a variety of other companies that are probably a little more well funded. But the reason I love this one is it offers right now a fantastic dividend yield. The dividend yield is 3.7%. And on top of that, in 2023, this thing grew at an astonishing rate, over 60% in value. This thing has gone from lows at $3, hit almost $30 a share, sold off down to some levels here. It's trading below these moving average lines. So Opera is a play where I've used their product, and I kind of fell in love with it. It's a search engine. They do use Google Chrome for all their search engine operating, but they do offer like free VPN, so you can keep your privacy online. They have AI systems built into things. You can use ChatGPT and a variety of others. And I can't say that their product's bad. It's really, really good. And I think that looking back in a couple of years, Opera could be one of these plays where it's up, $30-$40 a share. But on the flip side, it could be down to zero. It's a growth stock, so it's going to be very, very volatile. Another thing I do love is look at this yellow line here. This yellow line represents very, very hard support for Opera. You guys can see it hits it, once, twice, 3 times, 4 times, and then recently 5 times. So I really think we could see a little buying pressure start entering pretty much near and around this 10.50 mark, for a possible trade, or even just buying low, trying to sell at a higher price here. So Opera is an absolute fantastic play. All right, moving on to stock number 3 here. Stock number 3, the last one, is Meta. I know you always hear buy low, sell high. Meta's hitting all-time highs. I get it. But the thing that I do love about Meta, there's a couple of things, right? Meta owns, Oculus. They own Facebook. They own WhatsApp. They own Instagram. And, what they've done very, very well is actually reestablished, their advertisings. In 2023 and 2022, their ads weren't doing very well, and they saw for the first time in company history a dip in daily active users with their Facebook. And they changed it. They changed their policies, they changed a variety of things to get more people in line with that, and we've seen a increase in daily active users over the past couple of years. They're heavily invested right now into Oculus, which, they do have, the pretty much they're the leader. I will say they're the leader of that sector, in my personal opinion, for VR. Yes, we do have Apple that's involved in it, but their VR is about $4,000, $3,500 when you can buy Oculus for $700. Looking at some of their fundamentals here, let's break them down. They're right now, like I said, their daily active users is going up. Their advertising revenue is going up. Like I said, their EPS is going up. Their total revenue is up 15%. Their cash flow is up 33%. So yeah, the stock could be a little short-term overvalued, but in the long run, I really think Meta could be an absolute fantastic play, as well as another reason I think that, Another strategy you guys could use to invest into this stock would be to dollar cost average it. So, investing consistently is a great way to get a good average price for your shares, because if it does sell off, you can just average down that price. So when it does recover, you can make a lot more money doing that. So investing consistently right now, rather than just dumping in a bunch of money, is historically a great way to invest into growth stocks that are, pretty overvalued. Imagine if you guys were buying at all-time highs here and the stock started selling off. Now, instead of your average cost being all the way here at 380, now it moves down to, 230. So once it recovers, you make a lot more money. It's a good way to invest when stocks are at all-time highs, so you can buy low and try to sell them at a higher price. But guys, these are the top 3 stocks that I'm buying right now. I hope you guys all enjoyed it. Check out my swing trading masterclass course. I highly recommend it, and we'll see you guys in the next one. Take care.